morning. It is the day after April Fool's Day. I got a bunch of you yesterday when I started saying that. Announcement. I'm going to try and make this happen. I am going to try on 4/20. I hopefully it's, and I haven't looked it up on the calendar. Hopefully it's a day that I'm going to do the podcast. If it's not, I'll do a special podcast. I'm going to go and try and do it high as fuck. Honest to God, I'm going to take a bunch of edibles. And I'll just do the 4/20. Let's celebrate on 4/20. I mean, again, I don't mean to spout any kind of things on this podcast, but hey, I'm all for the legalization of marijuana. I think if people get the opportunity to drink alcohol, I think you should be able to have the opportunity to do marijuana as well. So that's my thought. Let me know what you think about it in the comment section. Do you think I should get high on 4/20? I am going to do that. Second personal announcement is tomorrow I leave for a Mexican national women's team game that's down in Orlando. So I may do the podcast tomorrow morning. I have to look at my flight. I don't know exactly when it is. I think it is in the morning. So I'll probably skip it. You will get a newsletter. Understand the newsletter is 100% for free. So all of these, most of the newsletters are free. If you see a little paid thing next to it, it's a paid one. The paid one's more strategy and stuff, but you can make a lot of money. For instance, just 3 days ago on 3/28, well, maybe 4 or 5 days ago, I said buy TSLQ before Tesla deliveries next week. Well, if you were listening, then you probably made a good bet on that one. We'll go over that in a little bit. But let's take a look at the Qs first. The Qs. Right here, I pointed out yesterday, I think the first level of defense is 440. I think the second level of defense is 429. If you trade in this range, in my mind, I think this is an opportunity to buy. I don't think that we're going for the 10% pullback down to 400. I think we may pull back to this 430. Right now in pre-market, you're at 439. So you're starting to break this 440. Not great, but not the end of the world either. It's an opportunity to buy. The economy is still strong. April, energy month. Energy was up yesterday. Let me see if I can see it, if it's still there. If we go to market, if you go to market data analysis, let's take a look at today. I don't think this is in pre-market. Well, maybe, no, this isn't pre-market. So you can take a look. Go down to the sectors. Let's see, where is it? I thought it was here. There was it. Well, I'll find it. I'll find it for tomorrow. But there is a sector analysis of this. You can see right here today. I looked at it, I thought yesterday. Commodities. No, it's not commodities. Countries, cryptocurrencies, currencies, emerging markets, global, growth versus value, market cap, real estate, sectors. There we go. Sectors, I know it was here. So here's your spider sectors that you have, and take a look at yesterday. Technology was up 0.28. Energy, biggest winner of the day. Communication services, that was all driven by Google. So take a look at when you have Seeking Alpha, go to market data, and then go to sectors. And take a look at today. Take a look at 1 month. Take a look at year to date. Take a look at all of these. I still think that you are in a solid upward trend. Yes, in a lot of these, you are close to 52-week highs. But I absolutely think this is an opportunity for you to buy on a pullback. If you look at this, in my mind, I think this is the trading range that you do. I don't think you wait for it to get down to 431. I think you start trading it, and I think you start looking at it. Now, as I said, Tesla, it's down 7% after Q1 deliveries miss. It was 387,000 vehicles versus an expectation of 457,000. And that was brought down significantly from around 500,000. They delivered 484,000 vehicles in Q4 and delivered 422,000 a year ago. They slipped to 387. That means the multiple on Tesla, the growth multiple, comes down, which means that the market is going to take this stock down heavily. It is already down about 7%. I said it before. I was nervous about this 172 buy. I didn't think this was a good opportunity to get in. I thought there was more downside to go. I do think that 160, 150, I think you may be able to get down to 140 on this one. If we look at what I said, which was to play TSLQ, in 5 days, you're up 8.13%. Just in pre-market, this is up at, let's see, it's trading at $41. So just $38. You didn't listen to the algorithm, even though the algorithm makes you 86% over 20 months, because this has only been around for 20 months. So the algorithm makes you 86% in this. 16 positions, not even one per month. So understand the algorithm has some type of ability in here to trade within a range that's going to make you money. 86%. Again, 16 positions, average win 13%. You can see it here on a weekly chart. It's just getting started. Tesla's overvalued. I think there is more downside to go. I think you play this because there's two hurdles in Tesla. The first one was this deliveries, and it's the March deliveries, and specifically the March deliveries because we were talking about how China was so strong with their $10,000 EV that they're dumping on the market. China, Tesla went from 6 days in their factory to 5 days in their factory. They had the Model 3 refresh, which they blamed a slowdown in Fremont for the slow deliveries. But 164, I don't think you're done going down because that was the first hurdle. Your second hurdle is April 17th when they announce earnings. If we just look, where are people holding since the last earnings? Because the last earnings was an absolute disaster on January 24th. Where are people holding? The VWAP right now is 185. That's the VWAP. So understand that's where people are averaging their buy. I think you still have more downside. If we look at the weekly on this one and you look, you just had the death cross. And you're going to continue that death cross down. If we pull this back to, let's say, let's go back to COVID, pre-COVID, where Tesla was. If you go back to pre-COVID, look at where most people are holding this. It's between 38 and 52. There is a no man's land down here. Your next stop is 150. I mean, your next stop on a volume trend is 150. So take a look at the charts, understand the charts. If we just pull this back to January of last year where you had quite a run, your next stop down there, 120. You know, you've got this no man's land between 156 and 120. There's no volume that's built up in there. So take a look at that one. They did disappoint. I think there's another hurdle on this one. I think TSLQ is still in play. I think TSLA is probably not in play. Some of the biggest movers of the day. Canopy Growth rose 5% after institutional shareholder services approved the plan for new Canopy USA LLC. There's a lot of talk about this. I just mentioned I may do the high 420 thing. Let me know. Let me know your thoughts. Biggest losers. If you got into Cano, shame on you. Plummeted 29% after the vehicle maker's release of mixed Q4 results and disappointing outlook. Trump media, it got back down. I mean, I was warning everybody in DJT. I said there's a lot of issues with this. We're going to look at it in a 5-minute chart because I put in these, I think it was a 5-minute. Maybe it was, let's look at a 5-minute chart because I think I put it in a 5-minute chart. That, hey, that's the high. But I thought there was more room down. I still think it covered that gap. I mean, we talked about this. It was covering the gap to 50. There's a gap down here at 38. It's going to get to 38. Right now in pre-market, you're at 47. They announced their earnings. They also announced that they are not going to release any information. So I don't know why you're investing in this. I have no idea why. There is no reason to invest in this. There is a reason to trade it, but right now it's even super weak on a trading platform. It's just not good. But DJT, biggest move of the day. GE sank because 20% they split out three different companies. So you've got a bunch of stocks if you held that one. Other big news this week. We talked about Tesla deliveries being one. Disney is another one. Disney is prevailing so far. It looks like maybe Disney might win this proxy fight with Trian. Either way, this was really good for Disney. This was not a bad thing for Disney whatsoever. If you look at Disney stock, since this began, it's been a huge run. I mean, just look at January. Since January, 37%. Now you're settling down here at about 121. I've said I didn't think that Disney was going to go anywhere. They threw out everything in the kitchen sink during their last earnings. Their next earnings are coming up May 8th. They've got another big battle ahead because they've got to come out on top. I don't know what they're going to throw out. This is the first big hurdle. I would expect the stock to try and pull back maybe to the 100 level once all of this hullabaloo is done. But expect this one to kind of, just linger about. I do think this is a long-term holding. I'm sitting there at about $95, I think, average purchase price. I'm not getting rid of it just because it may pull back to 105. I don't know when I'm going to be able to get back into this one. So I just continually add. This is one that you just want to add to because it's a good company with good products, good earnings, and good management. And yes, I think Bob Iger is doing a fine job. I think that the succession is not a Bob Iger problem. I think Disney's had that problem forever. Healthcare stocks, including UNH, just got killed. Payment update. Humana-led insurance stocks are lower in after-hours trading, following reports that Medicare Advantage plans will only be getting a 3.7% payment increase in 2025. Medicare, that's the bread and butter of most of these managed healthcare companies, is the Medicare Advantage plan kind of stuff. UNH is at $457. It just opened up. This one is down 6.7%. Again, Tesla is down 5%. It was down 7%. I would expect that one to be down about 10%. But understand, UNH right now, even that 489, I said buy it under 500, buy it under 500, sell it over 500. I still think that $500 plan works. I just think you're going to need to wait for this one to shake out. The most recent buy right here, you can see it bounces off this 450 level. So I think anything with a 4-5 handle on this one, I think you'd be good. I think you'll be fine with that one with a 4-5 handle, but maybe wait for it to go. I mean, look at this weekly. It's just, at certain points in time, it's going to make sense to get into that one. So this is a great chart, by the way. This is a great chart for anybody that's looking for data center revenue. Take a look at it. This is why NVIDIA has the multiple that it does and why it has the lead. Look at the last 3 years of data center revenue in Q4. That's AMD goes up to $2.3 billion. Intel goes down to $4 billion. Where are they getting that? Where's that money going to? It's all going to NVIDIA. So NVIDIA is a great, great company, one to hold on to. I think it's good. I posted in the Facebook group. Let me see. Let me just look at this because I did post yesterday that I sold out of my entire Webull. I sold the $6,000. I think I put it in there. Oh yeah, April Fool's. Jim Cramer retires. This is it. I sold out of so I have $5,967 to spend. I will be going over the next couple of weeks. I will be putting in a portfolio that I hope will beat the S&P. Right now, I'm doing better because I'm at 0 and everything's down today. So I'm doing better than the S&P right now. But I will be going over these buys. To address the question, and I did get this question on YouTube, and it's in my social stuff, but I'll address it now. Yes, I've donated the money. No, I did not take the money out of Webull and donate it in cash. I think this got cut off on my last recording. But what I typically do is I will take Apple shares. I hold a ton of Apple shares. I think my average purchase price on Apple is like $10 or something. And so what I do is through Fidelity's giving program, I actually give, I think it's St. Jude's. It's in their giving program. I pick, literally just go in there and I pick the charity that I want and I give them stock. And so that $6,000, whatever I made, I think it's like $5,000 now. Last year, I gave enough. I don't dollar for dollar look at it, but I do donate that, at least that amount every year. And the reason I do this and I don't do the cash is if you're not familiar with that. So my average purchase price on Apple is $10, okay? Say it's selling and I give it to a charity at $170. I don't have to realize the capital gains between $10 and $170. So that $160 per share, that doesn't come out as income for me. It's given to the charity at $160. And I actually realized the $160 as a donation. So it goes, again, that's a donated stock. So I don't get the money. It's not like I'm putting money in my pocket, but I get that as a donation. I do that every year. It's just a really, really good opportunity for me to maximize that. That's why I don't give the money. It's just I've got all these shares sitting around, so it's better for me to just do that. But that's the update on Webull. I will be going over that. I will be putting it in Savvy Trader. I will be putting it in the newsletter. I will be announcing it here. Brad Freeman, big on SoFi. I mean, if you want SoFi news and information, he's big on this one. SoFi is under $7. It's at $6.99. It's at down 3% today. The algorithm got you in at $7.55. I continue to say I think it's a $10 stock at some point in time. So if you want to add to this, that's fine. Just realize we'll go and we'll look at this on FinViz first, because I want everybody to be able to look at this. They are not making money. Their forward PE is 28. That's a big PE. Year to date, you're down 27%. It's trading between $4.45 and $11.70. So if you buy it here at $7, $6, somewhere in that neighborhood, I think you're right in the middle. And again, I think it's a $10 stock. It's going to get some hype. This is a hype stock that will, on volume, on some type of news, maybe it's earnings, it will get hype. So understand that's the way to do it. And if you want, Brad Freeman is probably one of the best at doing this thing, at looking at it. He's got a great newsletter at stockmarketnerd.com. He is one of the best analysts. He's a fundamental guy. Doesn't look at charts, doesn't time things. He just dollar cost averages his way in. But he's got a fantastic process that is set up and outlined in his newsletter. But again, you have to believe that SoFi is going to come out on top. Top 5 exploration and production ideas from Goldman Sachs. I said it yesterday, and I showed you the sectors, how yesterday energy was up. We can look at energy today. It's up 0.5. XLE up 0.5. 1 month, it's up 9.15. Year to date, it's up 13%. It is the leading sector, right behind communications, right ahead of communication services, financial services, still year to date, 11%. You can take a look at these sectors. I really like those, but these are top 5, according to Goldman Sachs, exploration production ideas. It's ConocoPhillips, it's Devon Energy, it's Magnolia, it's Cosmos. Those are the big ones. So take a look at that one. That's a great article. These are the most crowded within each sector, Bank of America. So what Bank of America did is they took a look at the sectors in the S&P 500, and they came up with stocks when a large number of investors take the same position in a particular stock. And so they took a look at the sectors. Now, XLC, biggest one, Netflix. XLY, biggest one, Chipotle. XLP, biggest one, Monster Beverage. XLE, biggest one, ConocoPhillips. In financial services, XLF. So this is a lot of people that are getting into these. XLK, it's ServiceNow. Fund percentage of funds owning, 42% of the funds in XLK own now. XLB, Freeport-McMoRan, FCX, American Tower. These are good ones to own. In contrary, because you don't want to follow a lot of people, but maybe you want to look for some contrarian ones. These are the least crowded within the sectors. In XLC, Communications, News Corporation. In XLY, it's Ford. In XLP, it's Campbell's Soup. XLE, Kinder Morgan, which I actually think Kinder Morgan might be a good opportunity to actually buy. XLK, it's Corvo. QRVO. In XLRE, it's Realty Corp. So take a look at that article. That one's a good one. One of the things that I wanted to make mention of is that when I am building this new portfolio in Webull, I will be using the quant. And so I just go over here and I look at top stocks, and I can do the quant rating, and I can look, okay, what's the most recent stuff that's big? I mean, General Motors has a 4.94. And if we just go and we look When did they mention it was a strong buy? Here on 12/22 at $36. Where's it at now? It's trading at $45. So the quant doesn't always time things perfectly, because you can see down here it went from a hold to a buy at $32, and then you got a strong buy, and then it went back to a buy, but it still kept going up. So I will be using this quant rating. If you want the quant rating, again, there is a sale going on. It is for one more day. 25% off your membership. Go to my link tree. That is down below. Linktree second link. It is Seeking Alpha Premium for $50 off if you want to follow and build a portfolio like that. Go and look at it. So in building that portfolio, I just looked at the largest quants in the tech space. PSTG, we went over Pure Storage. In my newsletter, there's an in-depth article about PSTG, how I think that PSTG, I think it was at 51, was a buy. I said it was a little bit extended, and then they came out with crazy earnings, and it popped up. But I think that 42, you can see, it's clearly trying to come back to this $47. That would be where I would probably buy this one. But Pure Storage right now in the quant, it's a top rated stock. PSTG, we can see when it went to top rated by just going to the quant. And you can look at the quant ratings here in Seeking Alpha. It just got a strong buy at $52. We'll see where it goes. The 52-week range on this one is, I think it goes from, 58.46. So 58.46. The only problem is the valuation. But as Steve Kress said, he looks at not necessarily the overall valuation. He looks at this PEG rating. So his algorithm that is the quant looks at that PEG rating. And that PEG rating right now is 1.83. The PE is enormous on this one, so much higher than the sector. But the PEG, which identifies growth, that one is actually 5% below the sector average. Sector median, I should say. Sector median. So PSTG 5-year average is 2.94. You're trading well below that 37% where they've traditionally traded. So this one might be a good buy for my Webull account. I will let you know. We looked at Boyle yesterday. Boyle went nuts. Boyle was up like, I think 10% yesterday. We can look at Boyle. I think it did get a buy here in the algorithm at some point in time. Yeah, 14.28. You're at 13.75 right now. It got the buy yesterday. It went from trading at about 12.89 all the way up. It was a 1.64% gain. It was a little bit of a gain, but it's marched its way back up. 13.77. Here's what I want to point out to you. The global gas glut could reach multi-decade highs in the coming years. This is an article that outlines energy for you. It's natural gas. It outlines what the problem is, why warmer winters are having a problem, why China is not importing enough to actually be what we're producing. Here in the U.S., we're one of the largest liquid natural gas suppliers. So it's a problem where this commodity may just continue to go down. If you're into the commodity of gas and energy, read this article. It's an important one. It outlines everything for you. I thought it was really good. SMCI, I bought a bunch more last week. It's not doing as well as I would have hoped. This is an interesting article. Right now it's down 5% at 983. I think I'm in at 1,050, somewhere in that neighborhood. SMCI, I do hold a large position of SMCI in my brokerage portfolio. These are just buys in my retirement account. But this is a great article. It pulls in the bull and bear cases for Supermicro. Kind of the conclusion of this guy is he's not sure that he thinks there's better places in the AI space and partially because of management stuff. But he does think that it's still a good company. Just think it's overvalued right now. Ironically, he thinks it's overvalued. The quant says strong buy, and the valuation is a C. And when you look at the PEG ratio of this one, the forward PEG is 0.94. The sector median is 1.94. So the quant thinks that it's still fairly valued. Just thought that was interesting. I will include in the newsletter, I got an email yesterday from Motley Fool about NVIDIA not being overvalued. And there's quite a good chart of their PE and their historical PE. What I want to point out to you is that I believe that here in the quant, NVIDIA is a hold, but their valuation is not crazy. And you look at that forward peg at 1.04, it's even lower than SMCI. So I'll include the notes from Motley Fool in my newsletter. And you know, the conclusion is forward expectations that support this valuation are not guaranteed. So that forward peg is not guaranteed. So if an investor is particularly concerned about a decline in NVIDIA's GPU demand due to a decrease in investments in data centers or artificial intelligence, there's plenty of room to argue that NVIDIA's valuation is not as reasonable as the chart above makes it out to be. I thought that was interesting. Just, again, I think there's better places in the market. I think the market's expanding out. I think there is a place to hold NVIDIA in your portfolio. I think there's a place to hold SMCI in your portfolio. But with the talk of valuation, maybe there's a better place. Intel might be a better place to talk about, hey, it's not a buy as far as the quant goes. But is this a buying opportunity? I argue that Intel, right now, all Pat Gelsinger has to say is that profits are coming. And right now, the bar is so low for Intel that all they have to do is say profits are coming. 4306 is where the algorithm got you in. You're just passing your 200-day. Your 50-day is starting to turn positive. This could be a nice little move. Yes, you're down 1.84% today. I hold this one at about 48, I think, is where I bought. $25,000 worth. I thought their earnings were going to be good. You've started to get into this gap. Remember, this gap is between 45 and 49. I think you get back to 49. I think you continue this bullish run that we've seen from Intel. I think we've just run up against this 200-day. It's just pulling back, but your 50-day is still moving positive. I think that this one changes course. Just personally saying, I think this one changes course. Great article yesterday. Zoom and Salesforce stand to benefit from Microsoft's unbundling of Teams in Office. So understand what Microsoft Teams was. It's a video chat platform. It's a productivity platform that is included in the Microsoft suite. So typically what Microsoft did was they included Teams when you licensed Microsoft Office. Well, they're separating it now. So essentially Teams will be, I think in the European Union, it will be a $3 add-on. The biggest beneficiaries of this are Zoom and Microsoft. So Microsoft, I still say, or Zoom and Salesforce, because Salesforce has Slack. So Microsoft is down 1%, provides you a buying opportunity. This one, I said it, get it under 400. I don't know that you'll have a chance to get it under 400. So if you can buy it with a 410, 415, somewhere in that neighborhood, I think you're okay. Zoom in particular, you guys know I chose Zoom as my video conferencing service for the paid newsletter. I like it. It's down 1.84% today. I don't know how this company actually turns this back around. The valuation on this one is still crazy. It is still nuts. If we go to Zoom, let's look at the quant rating on this one. Now, forward, it's 0.72 and the sector median is 1.94. The PE is still a little bit crazy, but it trades below the sector. So if they're going to be forced to unbundle Teams in the EU, guess what may be coming here in the US? An unbundling of Teams. And if that's the case, then Zoom may actually benefit from this. Zoom may find a partner to buy them. Zoom may find somebody else to actually sell more services. But I think it's like $15 a month is what I pay for the professional license versus $3 for Teams. I don't know. Is Zoom that much better? I don't know. What about CRM? Well, when we look at CRM, it's a hold. When you look at that PEG ratio, the forward, it's really low. It's 28%. Still a hold in the quant, but I think anything with Salesforce under 300, I do own Salesforce. I own Salesforce in my Roth IRA. I do believe that this one will grow. And the reason I believe that this one will grow, this is just a company, when you want to automate something, this is who you go to. And this is simple, and it's just it's investing 101. It took a dip, and should have been buying this whole time. But you're seeing this one run up against its all-time highs again. It's not crazy valued. overvalued. But I do think that opportunity with the EU, I think they just put Slack into they bought Slack. So Moody from Spotify wants me, these are social requests, wants me to look at uranium energy, UEC. Uranium, obviously just a good energy source. I don't know what UEC does. Let me see what UEC does here on, are they just it's energy uranium. Let's see. Engages in uranium and titanium mining or related activity. So it's a mining company. PE, forward PE, crazy, 37. I mean, for an energy company, crazy. Year to date, you're up 8%. Performance over 1 year, 140. Average target price, $10.33. You're trading at $6.99. You just don't have analysts looking at it. Most recently one, speculative buy at TD Securities, $6. That was in September of last year. So I'd take it with a grain of salt. I'm not familiar with this company. I'm not familiar with uranium as a whole. But, I mean, the valuation is an F. Profitability is an F. Ranked number 1 out of 16 in which one? Coal and consumable fuels. Not something I particularly want to get invested in. That's what I'll say. The algorithm loses you 43%. You make 47% by buying and holding. So the algorithm doesn't even help you on this one. Average win 10.27%. It just, for me, this does it seems a little bit overvalued and hype. I mean, here, take a look at the volume in this. I mean, look at there was no volume back here, none. And then all of a sudden we get into this energy sector and you've got tons and tons of volume. I think there's better places to put your money in the energy sector, ones that are undervalued. Justin, you had me in the beginning with the April Fools. Alex said I had him with the April Fools too. And then IO asked, quick question, are you donating any of your profits from Webull? Absolutely, I do donate. I just don't... It's not like I take the $5,000 or $6,000 that I made in Webull and I donate that dollar amount. It's the donation at the end of the year or beginning of the year throughout the year where I donate. And I think St. Jude's is my number one that I do donate to, just so you're aware. Brett Costello asked, he just said Alpha Picks, and it's ALPHA, not AFL. I would suggest, Brett, you go subscribe to my newsletter. Because you would know that the Alpha Pix is spelled ALPHA. But what Alpha Pix is, it's a simple plan. I mean, it's got a sale going on. I got a $50 off coupon. It is 2 data-driven stocks picked each month. There's alerts when to buy, when to sell. It's over 20 stocks on day one. You get access to it. So if I go over here, I am a member of Alpha Picks. They gave me a membership. You get all of these analysis. You get access to the portfolio, which has a 131% gain versus a 38% gain on the S&P during that time. You get access to the performance. By the way, not only do you get the current portfolio, you get what they've actually closed and sold as well. So you can see when they actually sold it. They sold some of the 3/19/2024. They sold some of the SMCI, it looks like, but they're still up. You can read about how much they closed. This is the Migrate Concentration Risk Alpha Picks. They moved SMCI is up at 1,073%. And currently has a portfolio holding weight of 19.3. It will be reduced to 10%. So they reduced their portfolio exposure because SMCI was up so much. You can read all about that. Performance. You can look at the performance about it. You get the about section. So you can see how they've achieved that performance. You can see how can new subscribers get going with Alpha Picks. They have 3 strategies right there on how to do it. They have the portfolio process, when they buy, when they sell, when they let the winners run, when they reinvest proceeds, calculating performance, strategy characteristics, and then you can read about who these guys are. They are fantastic, fantastic stock pickers. So Alpha Picks does have a sale. You go over to Linktree, and it's the 3rd one down. Alpha Picks, want to beat the S&P? Right there. And again, click on the link and you get a $50 off coupon. So in fact, yesterday, Alpha Picks members, you got notified of a new alpha pick, and it was EAT. And if you got into that one, you're up pretty well over just 2 days. I mean, it's down 1.33% right now, so it might provide an opportunity. We can look at EAT, and you can read about why they like Brinker. It's gone on a run. And like I said yesterday, it's beaten XLY, but 47.85 is the buy in the algorithm. You got a nice little pop there. It's got some little pullback going on right now. But again, EAT, they have earnings coming up April 30th. There you go. That is the social requests. Let's look at some of the scans. First one, Taiwan Semi. Taiwan Semi was up yesterday. It's down 1.05% today. I've said that this line right here, anything under this one at 141, I thought that was resistance level. 140, 142 is the buy. You're at 140. I think if you get this one in the 130, maybe you might get a chance to get this in the 120s. They have earnings coming up on April 17th. Qualcomm, another core portfolio holder. Qualcomm here, 170, 80. You can see it's kind of fluctuating, kind of putting in that next shelf here at 170, 171. You're at 170.39. If we go and we look at the weekly on this one, you can see it's going to probably get to that 190, 200 level and hit some resistance. You haven't even had a golden cross of the 50-day on the weekly yet. Now, the MACD is super, super high. Yes, the RSI is super, super high. I just think we're continuing to grow on this one. This one is not expensive. This one, again, you have to worry about the double ordering and things that we've seen in the past from the semiconductor business. But I think this one is solidly in an upward trend. So for long term, I think you're fine. If you look at the valuation of this one, you look at that PEG 1.8, the sector median is 1.94. You're 7% below that. The Qualcomm PE 19, sector median 22. Forward 17. Sector median 25. Everything from the valuation screams that it's an opportunity. Now, your growth platform, when you look at the revenue year over year, yes, you've got some issues there. So, but they're taking their cash flow and they're making it work. Free cash flow, it's about 30% above the sector median. Operating cash flow is below year over year, the sector median. So, I do think that there's an opportunity here in Qualcomm. I like it. A couple of other ones, and I'll put all of them in the newsletter. One is CAH. This is Cardinal Health. This is a alpha pick. And this one is one that the algorithm got you in at 112 yesterday. We'll just pull this. Wow, there it is. Dividend got taken out right here. So Cardinal Health is a buy. Twilio. We've talked about Twilio before. It is an alpha pick. It is one that I think people got in. I think it's going to fill that gap at 71. Honest to God, I mean, at 58, this gets another bullish up cross here. You can see the MACD is just kind of hovering around here like it's done for a while before. I don't think this one is overvalued. I don't think that this one is crazy. I think this one's just getting this channel, and you're right in this amount. Looking to add Twilio as an alpha pick. I think the range is between 50 and 80 based on this weekly chart, and I don't have to enter it today waiting for the 4-hour algorithm. I was waiting for it, and I'm still... I still haven't gotten into this one. I probably will. Honest to God, I probably will just get into this one and throw this one in the Webull account. Melly, Tech, BIIB, some sectors that I wanted to bring up. There's a bunch of leveraged ETFs, but one sector is XLB. This is materials. And so if you want to invest in materials, look at that. And that's because of China reopening. The materials sector is getting ready for China to reopen, and there is some bullish sentiment in the China reopening at this point right there. So if you want to invest in this one, what we can do is we can go to market data, and we can just, let's just go to XLB. We'll just look at XLB because it's a buy right now in the quant, and you can read more about how it's a buy. But what you want to do is you really want to go to holdings and look. Okay, Lindy, 21% of this. So Lindy PLC, we can look at that one real quick. This one is a hold, and the valuation is because it's a hold. And you can look at LIN. And let's go look at the chart LIN. And XLB is just another bullish move on this one. And you can see LIN, algorithm makes you 17%, buying and holding makes you 43% on this one. Got you out at 11% gain, But the MACD has just fallen down. If we look at a weekly on this one, are we at all-time highs? We're at all-time highs. You're significantly extended, but that's 21% of the XLB. Your second is Sherwin-Williams at 7%. It only holds 31 companies. So take a look at these 31 companies, and if you want to, if XLB shows a upward trend, it's probably going to be in some of these companies that may be underperforming XLB. We can look at its charting. Let's just take a look at select symbols, LIN. We'll take a look. I bet LIN is outperforming XLB. That's just a guess since it's 21%. Yeah. Look, over 1 year, 29%, XLB up 14%. Year to date, we can look, LIN is up 12%. Short term, 6 months. LIN is up 25%. 1 month, LIN is up 2%. XLB is up 4.31%. So LIN is starting to may have some opportunity to get up to XLB, or XLB will pull back to LIN. One or the other. But there you have it. Again, Trendspider, it's got 14 hours left on the Easter sale, $6.39. Get it by going over to Linktree, sign up, and then what you're going to do is you're going to use that email, and you're going to email me, and I will email you back my welcome letter with all the links to import the algorithms, the watch list, the scanners, everything. I am going to be out of the office for the next week, so do your own scans. I mean, that's what I set you up with in Trendspider, is all of this stuff is based on the Trendspider charting and the Seeking Alpha fundamentals. Simple as that. I mean, if you get both of those tools from me, then you can do your own podcast in the morning. That's what I try and set you up with. So Trendspider, if you're not used to charting, get yourself free software. Join Webull. Join me on Webull and start investing in Webull. Join the Webull app. Get their desktop software. The desktop software is charting software. You can paper trade in Webull. And paper trading in Webull allows you to not use your real money and see how you'll do. So I like that one. Seeking Alpha Premium, they're having a sale, spring sale. It's on for one more day, 25% off. That's the second link that you can go to on Linktree. The third link is Alpha Picks. That's where you can beat the S&P, 33%, 133% versus 36%. But again, it's all on the Linktree. So you can go down there. You can refer a friend on AT&T, Savvy Trader, follow all my trades. I got a question yesterday about why both of the portfolios were for charge. No, see, this daily stock pick core portfolio, it's subscribed. It's for free. The core portfolio is free. The trading portfolio, which I will post in every time I do a trade, but this core portfolio is just 35 names. 35 names. And you can look at the gainers today. It's Oxy. It's Exxon. Exxon's up 2% at 119. I said it was going to 120. MPLX up 1%. Oxy's up 2.1%. Pepsi is up 0.45. Again, Pepsi's at Alpha Pick. Cleveland Cliffs is up. The rest of this freaking portfolio is down. What's the biggest loser? It's UNH. Second biggest loser is Tesla. Third biggest loser is Roblox. There's a lot of losers in here today. But overall, let's take a look at this, because if we compare this entire portfolio to QQQ, which is the NASDAQ, look at that year to date. The daily stock pick core portfolio up 22%. NASDAQ is up 8%. If we look at 1 year, I don't think there's 1 year of data. You go back to, I think it goes back to June. I started this June 21st. And you can see June 20th, I guess, was when I started it. Look at that. Over 1 year, I guess, March 31st, 2024, it's up 33%. NASDAQ is up 21% during that time. So long term, again, the point is you can buy a bunch of stocks. You don't have to, you can equal weight them. You can look at Alpha Picks. Alpha Picks they're adjusting with their portfolio. When you look at Alpha Picks, you saw that SMCI, some of it was taken out, mitigating risk, concentration risk. So 7 of the Alpha Picks have had a successful return to over 100%. Going forward, if his stock position reaches 15% weight in the portfolio, they reduce it to 10%. They don't do what I do. They don't have 60% of their portfolio in Apple. So take a look. If you have any questions, I will talk to you later. Just let me know. Okay, see you. Bye.
I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter. hopes and fears.